Welcome back to the channel. In this video, I'm going to show you all the customizing and also the end-to-end process for supplier security retention in SAP S/4HANA. So first of all, a small definition, then we will start with the customizing and then we will go through the process. If you want to skip the theoretical part, I provided you a timestamp in the video description. So a retention means that we agree contractually with our supplier that we will withhold typically 5 or even 10% of the invoice value. Let me actually give you an example. Here you can see, consider a construction company delivering services worth, let's say, 100,000 euro. We as a buyer will withhold 10%, so 10,000 euro as a retention. And this amount is only paid at a later stage. So for instance, after the warranty period. Or it could also be replaced by a bank guarantee. So this is in the end to ensure the quality of a product being delivered to us with a high value. So let's now start here with the backend configuration and then we will jump into the process. First of all, you must make sure that a certain business function is active. So this is done by a SFW5 transaction code. Here you click on continue and then you click on switch framework browser and over here you scroll down up until you can see log mmfi_p2p. Make sure that this business function is active. Now we will go to the customizing via /n SPRO, click on subreference IMG and then we will scroll down up until we can see materials management, logistics invoice verification, incoming invoice, scroll down up until you can see retention. And here is the main customizing for our retention. So we will start here with define default due date for retention. Let's hit this indicator. And here we can click on new entries and then per material group, we can define how long a certain percentage of the total amount which we need to pay to our supplier is retained. So we will select here a material group. And then you can see, we could say the date category is day, week, month or year. Let's say month. And then we say 6. So this means that for all incoming invoices whose materials belong to this material group L002, we want the system to propose a due date for retention 6 months after the due date for net payment. So meaning that the retained amount will be due 6 months after the due date of the net payment. Now we will hit on save and that's basically it. We can go back again, and then we go to define tax handling for retention. We need to provide a country or region. And now we can click here on new entries. And per tax code, or even tax jurisdiction if required, we can define whether the security retention should be posted net, so without taxes, or with taxes. So let's say for instance here we take the tax code V1, which is 19% input tax, and we say tax reduction is set. Then this means that the retained amount will be posted without taxes. We will also see this in the process. Now let's hit on save and that's basically it. We go back again to the next one called define control parameters for retention. And over here for our company code, we can say that in our invoice application or transactions, so the Miro transaction or even the Fiori application for incoming invoices, we want the due date to be a required entry for retentions. Then we could even say that the special GL indicator should be a specific one. If we do not select anything over here, then the system will take the special general ledger indicator H. We can also see this here in the search help. You can see K for our supplier, KH is the security deposit. And we could even select here withholding tax. If withholding tax is posted in the incoming invoice, and when we hit this indicator, then the system will post withholding tax in the retention document. For now, we'll leave it as is. Despite the customizing here for the retention, we also need to make sure that we maintained the document types for the logistic invoice verification. So let's scroll up a bit, up until we can see here number assignment. Then click on maintain number assignment for accounting documents. Over here, click on document types and invoice verification. Then double click here on the Miro transaction. And over here, you can see document type for retention was set to KA in this instance. Please be aware that it can't be the same as a document type for normal invoice postings. Despite that, we also need to make sure that our alternative reconciliation account is mapped to the reconciliation account of our supplier. So therefore we go back and back again. Once more, we go out of the logistic invoice verification and we scroll up until we are here in the financial accounting, accounts receivable and accounts payable, business transactions, incoming invoices, credit memos, postings with alternative reconciliation account, define alternative reconciliation account for vendors, And here we can see we have the security deposit, double click on the H, insert the chart of accounts, hit on enter. And then for our normal reconciliation account, we need to provide an alternative one. This one for sure you must define before, for instance, in /o FS00 transaction or even in the Fiori equivalent. So you can just copy from the normal reconciliation account. This is because the system will later post to this alternative one with the special GL indicator H. That's basically it for the customizing. Now let's jump into the process, and I will show you this directly in Fiori. And please make sure to subscribe to the channel. So in Fiori, we will start here with the application ME21N. Please be aware that it's only working with this application. It's not working with the new Fiori equivalent for our purchase order creation, which is called Manage Purchase Orders, by the way. So we click here on Create Purchase Orders Advanced. Now we need to enter the supplier first, then hit on Enter. We provide our purchasing organization, purchasing group and company code. And then further down we will say here we have an account assignment and actually a short text. Let's say construction in brackets asset, PO quantity is 1, the order unit AU for activity unit. Then let's say we have a net price of 10,000. Let's scroll to the right. Our plant is 1010. And quite important, we will now insert our material group L002. For this material group, as you recall in the customizing, we defined the retention period. Let's hit on enter. We need to provide a GL account here. This could also be derived from the material group. If the account determination was set up in the system, we will just take here a material expense account, and also we will insert a cost center. That's basically it. Let's hit on enter again. There's only a warning message, so that's fine. Now it's time to define the retention. So we go back to the header level, and over here, if we go to the right, there is a tab called payment processing. Here you can see right now the retention is set to not applicable. However, we could also say applicable at header level. So when we do so, then the retention we will define as a percentage value will count for the whole purchase order. Or we could say applicable on line item level, so that the retention will only count for specific line items. We could even say secured by bond, but this is then only for informational purposes, as then we would need to process a transaction for bonds. For now, we will say applicable at header level, hit on enter. Now you can see here we can enter the retention amount, let's say 10%. And that's basically it. We will override the warning messages here. So this is fine. Let's actually scroll down again, click on item details. And here in the delivery section, we will now say we do not expect a goods receipt as of now. Hit on save. And you can see the purchase order was saved. Let's copy this number. And then we navigate to the application called Create Supplier Invoice. This one over here. This is actually the new application to post an invoice. We could also do it for sure via the Miro transaction. This works as well. But I will now focus here on the new application. The transaction is an invoice. We will provide the invoicing date, posting date, company code, and a reference, test retention, like that. Then we have here the gross invoice amount, which will be 11,900. Our invoicing party, and that's it. Now if we scroll down a bit, we will include here our purchase order, hit on enter. Now you can see here there's a warning message, this is okay. And also there's an information message telling us that the item is relevant for retention, which is exactly what we wanted. Now, before we post this item, let's go down here to the payment section. You can see this item is actually due immediately. However, we could also say over here that the item should be due in 14 days, like that. And before we now post, let's actually scroll up again. You can see that there is over here field code retention due date. So this is the actual date where the retention would be due. And this date must be after the net due date has passed. So let's scroll down again. You can see here 14 days and 30 days net. So meaning that the retention due date must be at least 31 days after we post now this invoice. Otherwise, we will get an error message. For now, we will say here the payment terms are pay immediately. We will go up and provide our retention due date as, let's say, the 1st of August. Please remind yourself of this date because I will show you something later. And that's it. Now we can click on Simulate. And here in the simulation, you can also see we debit our GRIR clearing account. Right now it's 0 because there were no deviations. Then we have a debit to the service expense for our machinery. Of course, we also have a debit to the input tax. And quite importantly, we have a debit to our vendor of 1,000, which is exactly 10% of our service expense. And as you can see, this is here net. If we would have deselected the indicator I've shown you in the customizing to define per tax code whether this should be net or gross, then the system would have posted not 1,000, but 1,900 here to the alternative reconciliation account, including taxes. On the other hand, on the credit side, we have here the whole amount posted to our normal reconciliation account and also 1,000 posted to the alternative reconciliation account. Okay, so far so good. We can now click here on Post. And you can see the supplier invoice was generated. Let's click here on the invoice. Here we can inspect the invoice, or we can also click here on Journal Entries to see the follow-on documents the system created. And you can see the system generated 2 financial documents. This one over here with 2 line items and this one over here. Let's inspect the former one by clicking on it. You can see this one is for the retention amount. Scroll down a bit and click on the next line item. Let's click on Related Applications, Manage Journal Entries New Version. Then we go to the line items. And here we can see the system debited our payables domestic and credited the supplier retention account. So those are the actual 2 line items. One more important remark over here. Let's click now on this symbol and scroll down up until we see net due date. Hit on OK. And here, quite importantly, you can see that the net due date is actually the 29th of November. Even though, if you recall, in the invoice we set the net due date to the 1st of August. This is also because of the customizing setting that I have shown you in the theoretical session, where we defaulted a due date. So this means that in the end, no matter which due date we provide in our invoice, in case we configured the customizing before, the system will always take the date or the calculation for the date to be precise from the customizing. Let's go back and to the other one over here, Related Applications, Manage Journal Entries New Version. And if we scroll down here, we can see the other posting. So our debit to the service expense account for machineries, as well as our input tax and GIR clearing account. And on the other hand, the payables domestic account. So let's now actually copy this number over here. Let's go back and also we will copy this number. And now that's it. Let's actually now conduct a payment run via Manage Automatic Payments. Click on Create Parameter, provide an identification, create. Then we provide a company code, next payment date, let's say the 1st of June. Then we have our supplier, the payment method, additional log we will set to on. And also in the free selection, we will say document number, and then we will provide the 2 document numbers that we just copied. And this one over here. Hit on OK, click on Save. Now we will click on Schedule, Proposal, Start Immediately in Schedule. We can see now here our proposal has been generated. So we inspect the proposal. If we go into the proposal, then we can see over here, if we scroll down and to the right, the system would not post now the 11,900 in total, but will only pay 10,900 because 1,000 were retained. Okay, let's go back again, select the entry, and then we will say Schedule Payment, Start Immediately in Schedule. We can see the payment was conducted. Let's navigate into the payment. Here we can see under Payments, also the journal entry over here. Click on this one, Manage Journal Entries New. And now if we scroll down a bit, we can see here the system paid 10,900, so the bank was credited, and our payables domestic was debited by 10,900. Okay, that's basically it. Now, once the warranty period is done, we would need to pay also the retention amount. Okay, this marks the end of the video. I hope you liked it. It took a lot of effort. So I would really appreciate if you subscribe to the channel and activate the bell. Also make sure to subscribe to my Patreon, where we have a community chat and where I post lots of informative documents about SAP. The link is in the bio of my channel. Thanks a lot and see you next time.